Coming into this week, I was really worried about Danaher, the life science and diagnostic powerhouse, beyond for the Travel Trust. You can follow, of course, by joining the CNBC Investing Club. See, for many years, Danaher was arguably the best-run conglomerate on earth. And the stock has been a phenomenal long-term winner, up over 1,000% over the past 20 years. But ever since we got through the pandemic, the stock has struggled to get back on track. Now, we bought this one in early 2022. We happened to own it for a couple times previous in order to get a chance to buy Danaher on weakness, because I expected the business to stabilize and the stock to make a comeback like that. But for one reason after another, Danaher never really found its footing. First, it was China's slower recovery from the pandemic. Then customers overordered in response to the supply chain crisis, leaving them with excess inventory, meaning no need to buy new stuff from these guys. Then it was that tepid IPO market, because fewer biotech IPOs translates into fewer new drug companies with money to spend on Danaher's equipment. Oh, then it was President Trump's tariff extravaganza, along with the spending cuts to the National Institutes of Health. Again, less money for the life sciences equipment. As a result, this has been a tough stock to own. Danaher always seems to be on the verge of getting better, and historically it's been one of the best-run companies on earth. But in the last few years, they keep dropping the ball. And remember, I blame them because I don't really care about their excuses. I want wins. Now, making things worse, Abbott Labs and other charitable trust holdings saw a major pullback last week. And that was in part because of issues with the Chinese business. Remember, Danaher has big China exposure. So we decided to sell a bit of Danaher for the charitable trust just in case something went wrong with the quarter. That's how worried we were. And I got to tell you, when Danaher reported on Tuesday morning, it almost gave me a heart attack, because the stock immediately got clobbered. The company actually delivered a pretty good set of numbers: a healthy revenue beat, steady organic growth, and better than expected margins, all leading up to a 16-cent earnings beat of $1.64 basis. I like that. Now, the last time Danaher reported strong results in April, management paired that with very cautious guidance, which held the stock back. This time, though, management raised their full-year earnings forecast and also gave healthy guidance for the current quarter. Now, at first, I breathed a sigh of relief when I saw those numbers. But then I checked the stock, and somehow it was down. In fact, at one point, it was down nearly 7% in pre-market trading. Well, guess what I wanted to do? This earnings season has been a real roller coaster for the Travel Trust, and that plunge in Danaher almost drove me insane. Oh, you might argue I was already insane, but I mean, new levels of insanity. I started trying to figure out what the heck Danaher did wrong this time. Snake bit. Were investors objecting to the fact that Danaher only raised its full-year earnings forecast, not taking up the revenue numbers, even though they reported a revenue beat? Was that it? Was there a China issue like we saw from Abbott Labs? Maybe investors were disappointed that Danaher announced its CFO, Matthew McGrew, would be retiring next year. This is how I was grasping at straws. I didn't know what the issue was. I just couldn't believe it was happening again, even after the company mustered some fairly solid numbers and good guidance. But thankfully, this story got a happy ending this time around. The stock rebounded from its lows on Tuesday morning and was almost back to even by the time the market opened. Then Danaher rallied, although it was choppy, and it finished the session up 1%. Hey, not great, but certainly not the end of the world. Things got better yesterday when, upon further review, buyers stepped in and the stock shot up nearly $8 or 4.2%. Then it tacked on another 2.5% today. Only this quarter was a positive catalyst for Danaher stock, as it always should have been, because when you really looked into the numbers like we did with the Investing Club for subscribers, there was so much to like here. Of course, that doesn't mean everything's suddenly perfect for Danaher. There's some hair on this one, like in your soup. Starting with the thing I've been most worried about, and that's China. Sales were down mid-single digits in the People's Republic versus modest growth in North America and high single-digit growth in Western Europe. On the conference call this week, Rainer Blair tried to stress that only parts of China are bad, touting strength in the company's biotechnology and life sciences businesses, but said that those were more than offset by the decline in Danaher's diagnostics business due to volume-based procurement and reimbursement changes that were implemented by the Chinese authorities late last year. It's not just Danaher, believe me, everybody got hit by this. This volume-based procurement issue is a result of China's national strategy to curb healthcare costs. And it's the same problem that plagued Abbott when they reported last week. I was upset about that, too. But putting aside China, I think there was far more good news than bad news this quarter. For example, while all three of Danaher's core segments reported better than expected results, their highest margin biotechnology segment led the way. That had 8% sales growth. That's 150 basis points of operating margin expansion and operating income of more than 12%. Wow, that's very good. The core of Danaher's biotechnology segment is its bioprocessing division. Now, it is about a $6 billion business, but one that's struggled in recent quarters. Finally, though, bioprocessing looks to be on the mend. A few months ago, management started talking about positive order trends for that business, and now Danaher says these trends continued throughout the second quarter. That's great. The book-to-bill ratio for bioprocessing orders remains at around 1, meaning the company's fulfilling orders about as quickly as they get them. In particular, Danaher is seeing success with monoclonal antibodies, which represented over 75% of the bioprocessing unit sales. That's good, too. Here's how the CEO put it, quote, overall order activity in the first half and second quarter are fully supportive of a high single-digit core growth in the second half, end quote. And he thinks bioprocessing can maintain high single growth long term. Pretty good. So after investors had time to digest Danaher's quarter on Tuesday, they ultimately decided that the good did outweigh the bad, and the stock broke out the upside the next day. Now, remember, we saw the same problem, the same issue in we saw it in Domino's on Monday and Tuesday. Sadly, during the height of earnings season investors, they're so quick to judge. Many saw the stock down in pre-market trading on Tuesday and simply figured that there must have been something really bad about the Danaher quarter, when it simply wasn't the case. I'm betting that that's going to be the same thing for Honeywell, for the same thing for Dover. See, it was only after investors looked more closely that the stock finally got its due and may at last be poised and ready to return to the wondrous days of the old Danaher. Here's the bottom line. It's been very tough to be a bull on Danaher for the past couple of years, and the company's still not perfect. But I think we've finally reached the tipping point here now that the core bioprocessing business is on the rebound. That's why we're sticking around for the Charitable Trust and why you have my blessing to pick up some of the stock right here. Let's go to Todd in California. Todd.
Hey, how you doing? Hey, with all the managed healthcare companies just getting shellacked, is now a good time to maybe take a nibble at Cigna?
I want you to wait until United Health makes a clear vision of what's really going wrong. So United Health's going to report, and that's going to be coming up. And then once they report, we then look at the downside for the rest of the group, and we make decisions. Now, that's only 5 days away. So let's make sure we wait, bat on shoulder, and then we'll make our move. Right, look, guys, it's been real tough to be a bull in Danaher lately, but I think the business is finally turning around. That's why I'm sticking with it, and you should do some buy. Now, much more Mad Money at this year's NVIDIA GTC conference. Jensen held Quantum Computing Day. So we need to understand more about this industry. I'm checking in with one of the players in the space called IonQ. Then Leadership Matters in Bull Market. I am sharing which groups are leading us higher and why it matters. And of course, all your calls rapid fire in tonight's edition of the Lightning Round. So stay with Cramer.